So, as promised, today we are going to discuss some famous mistakes in F6, because I told you that F6 is a paper of small things to learn. Yes. And when it comes to the end of the paper, last ending days, things gets mixed up, right? So I have tried to cover some major mistakes, although there are more things as well, but still, right? So the first point written in front of you is property income, individuals versus companies. For individuals, property income is taxed on receipt basis, cash basis. That means you just imagine the fiscal year, whatever cash is coming in and whatever cash is going out. Cash is coming in and cash is going out, you need to take. But for companies, property income is taxed on accrual basis. This is very famous thing. Accrual basis means you need to see the when you have provided the service. You don't need to see the cash receiving and cash outflow is not relevant. Only the accrual basis is important for companies. But hope you remember there was one area of lease premium area. So for example, you are A and this guy is B, and you have given rights to B, tenancy rights to B for 10 years. So the lease term is 10 years. Okay. Now in return, B gave you some premium. So you just have received premium received. Okay. So when A receives premium, there is one very important voice. Hope you remember. Premium is taxed on receipt basis. Premium is taxed on receipt basis. Okay. So in the A books, you will write premium received. Okay. Less 2% into n minus 1 multiplied by, this is the relief, and then you will get in the bottom assessable premium for landlord. Okay, this amount, assessable premium for landlord. Okay, right. Now the interesting fact is this, that this premium is taxed on receipt basis both for individuals and companies. If you are individuals, still it's on receipt basis, and if you are company, still this premium received is taxed on receipt basis for sure thing. Okay, be careful with this. Now if you come to the other side, this B, this side B. Now if B is a trader and B is using this property for the purpose of trade, then B will receive amortization of lease premium as an allowed expense deduction from trading income P&L. Okay, but now B will get amortization on this amount. B will get amortization on this amount. Okay, so the formula for amortization of lease premium is equal to assessable premium for landlord divided by lease term. Now hope you remember the questions of companies, corporation tax. Sometimes they make you tenant, and they make you this B. Let's say you are B in the question, and now you have to calculate amortization of lease premium. So sometimes they give you this number, this premium received, so you have to deduct less 2% into n minus 1 to come here. But sometimes they directly give you this assessable premium for landlord, this number. So now you just have to divide by lease term to calculate amortization of lease premium. Okay, so be careful with these wordings. These are some obvious marks. These are the mistakes you can do. Now then, hope you remember condition for transfer of personal allowance. Yes, can Mr. A, husband and wife, can Mr. A transfer his unused personal allowance to Mrs. A, or Mrs. A can? Yes. But there are certain conditions. Both of them must be basic rate taxpayer, right? Number two, joint election is must. There must be signatures of both parties. Both parties are agreed on it. And the third thing is a fixed amount of 10%. 12570 multiplied by 10% is 1260 personal allowance will be transferred. Okay, so the first condition is very important. Both must be basic rate taxpayer. And whenever you need to check the status of taxpayer, don't just look at the total income. Taxable income is very important. For example, if they are saying that Mr. A total income is 40,000, so Still this total income is 40,000. Like it is greater than 37,700. Total income is greater than 37,700, but if you deduct personal allowance 12570 from this number, then obviously the number will be like 28 or 27,000 something. So yes, taxable income is less than 37,700. So always check the taxable income. Always check the taxable income thing. Be careful with this thing to in order to check the status of taxpayer. Then for individuals, hope you remember there are certain incomes which are exempt. For individuals, there are certain incomes which are exempt. So interest income from national savings certificates, so this is exempt, but interest income from national saving and investment bank account, this is taxable. So be careful with the wordings. If it is written certificates, interest income, interest received from national and national savings certificates, then it is exempt. But if it is coming from investment bank account, then it is taxable. Be careful. Now guilds, government securities, only exempt for CGT purpose, but interest income not exempt. Yes, 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 yes. Listen, hope you remember there was a topic in the course you studied, guilds, government securities are exempt for CGT purpose. It's an exempt asset, but the interest income is not exempt of guilds, right? Then only occupational pension contribution by employee is allowed expense from employment income PNL. Yes, the pension contribution which is allowed, although we agree, I agree, we all agree that normally we get pension relief on pension. Normally we get relief on pensions, okay? But personal pension relief is different. Occupational pension relief is different. In occupational pension scheme, when an individual invests, transfers, contributes in his or her occupational pension scheme, like employees contributing in his or her occupation, then it is allowed expense from employment income PNL, okay? But if an individual is contributing in his or her personal pension contribution, then it is not an allowed expense from any PNL. It is not an allowed expense from any PNL, right? Yes, there are band extensions, ANI reduction. There are a lot of things, but not an allowed expense. Be careful. Okay. Yes, there are few things. There are few things which are paid net, and there are few things which are gross. Personal pension contributions are paid net, yes, and gift aid donations are paid net. So hope you remember, if actual payments are given for personal pension and gift aid, that means they are net. So you need to divide it by 80 and multiply by 100. You need to gross it up. You need to gross it up. But occupational pension contributions are always gross. Occupational pension contributions are always gross, and QCD, in companies topic, QCD are always gross. Okay, no need to do any divide by 80 multiply by 100. Then we have capital allowances, means tax allowable depreciation. So whenever you are doing a capital allowance chapter, always check the length of the accounting period. If the length of the accounting period if the length of the accounting period is exactly 12 months, then you don't need to apportion any WDAs or AIAs. But if the length of the accounting period is less than or more than 12 months, then you need to apportion WDAs and FIAs. But yes, one very important thing, there was 100% FIA, remember, for zero emission cars. So for that, you don't need to apportion it according to accounting period. We never apportion, or we never prorate first year allowance according to accounting period. Okay, right? One more thing, in the last year, when you are in the last year of business, that means if business is going to close in front of you, so in the last of year of the business, you don't need to count the length of accounting period. Why? Because we never calculate any WDAs, any AIAs, nothing in the last period. We just do balancing adjustment. We just do balancing adjustments on all pools. We just do balancing adjustments on all pools, dear students. Then we have partnership firm did not pay any tax in tax its individual partners who pays as a sole trader. Be yes, hope you remember, partnership firm does not pay any tax. These are individual partners, they pay as a tax as a sole trader. So what you do when you have a combined partnership income is given, so you need to do appropriation of profits, you need to distribute things to each and every partner. Now you need to calculate the total profit packet for each partner, and then once this packet is calculated, then you have to apply trading income rules on it. Okay, right? So be careful with this thing. See, it's in theory. If they are saying that partnership firm this much tax, this is not possible. Individual pays tax, each partner as a sole trader. Now in partnership firm, there is some wording which we call partner salary, interest on capital. Remember, so partner salary is not an allowed expense from the partnership trading income PL. Okay, it's not. Why? Because partners are owners. Because partners are owners. Partners are owners. So owners' personal expenses are never allowed. Owners' personal, you have studied this in trading income with me. You have studied this with trading income with me. So partners' salary, partners' interest on capital, partners' personal expenses are never allowed. Yes, if family members of partnership of partners or owners are working, then normal salaries are allowed, but excessive salary is not allowed. Then excessive salary is not allowed. Okay, this thing I have already explained you when I was teaching you. Whatever partners are getting from partnership is trading income. It's not training, it's trading income. Okay, because we do partnership for trade. We do partnership for trade. Okay, right? We never do job in partnership. So whatever you are receiving, remember this packet, the partner's salary, interest on capital, right? Less interest on drawings. Then you have residual profit, RP, residual profit. So all these things, the bottom line is trading income. Okay, this is your trading profit. Okay, then self-assessment. Yes, self-assessment, individual self-assessment. Whenever they ask to calculate, if you have stolen tax of government, if you have stolen tax of government, so normally they apply penalties. Remember the minimum penalties and maximum penalties. Minimum penalties are with disclosure, prompt disclosure, unprompted disclosure. Hope you remember, hope you did studied these topics. Definitely we have covered this in our class. So before calculating penalties, I always these are my famous dialogues. I always say, first calculate how much tax you have stolen, and that is called PLR, potential lost revenue. Potential lost revenue, right? This means how much tax you have eaten up, how much tax you stolen from government, and then on that tax amount you need to apply the percentage. Now take the example. For example, my real income was 80,000, but I disclosed only 60,000 to government. My real income was 80, but I disclosed 60,000 to government. That means I hide it 20,000 from government. Okay. So now this 20,000 is not PLR. This is not PLR. When I hide, when somebody hides 20,000 from government, when somebody hides 20,000 from government, let us say the tax rate is 40%. So how much tax he has stolen? This is 8,000. Yes, this is PLR. This is PLR. Okay. This is PLR. Right now. So be careful with this. Then There is one thing for self-assessment individual, there is one thing which we call penalty, and there is one thing which is called late payment interest. That is 6.5% now. So penalty is only applied when you pay balancing payment late. Penalty is only applied when you pay balancing payment late, but late payment interest is applied on both cases if you pay payment on account late, if you pay POA payment on account late or balancing payment late. It is applied on both cases. It is applied on both cases, but penalty is only applied when you pay balancing payment late. So in simple words, if you pay POA late, you will have to pay only late payment on interest. But if you pay balancing payment late, then you have to pay the payment late payment interest as well as penalty. Okay. Now one more thing. This is for individuals and companies. Late payment interest not allowed expense from individuals. Yes, if you paid your tax late, so definitely you will have to bear the late payment interest thing. So that late payment interest is not an allowed expense from trading income PNL of individual. Okay, be careful with this thing. But allowed from company's loan relationship box. Yes, if a company if a company paid tax late, or if a company underpaid the tax, so in that case tax department charges late payment of interest or uh, interest on underpayment, which is same 6.5%. So that late payment interest will go in the loan relationship box. Hope you remember there was a special box of interest income. There was a special box of interest income for companies, if you remember the lectures. So that will be an allowed expense from loan relationship box in companies. And yes, if you are receiving interest income on overpaid taxes, for example, if you pay more taxes, so that means government uses your money. So in that case, government will give you interest income, and yes, that interest income is taxable, and that interest income will go in the loan relationship box. This is the difference between individuals and companies. Cash basis private use element. There is a topic cash basis for individuals only. For individuals only. So cash basis private use element will be given ready made, and yes. Okay. For example, this is a house and there are many rooms in it. So let us say you are using one room for private purposes. You are using one room for private purposes. Okay. So now for cash basis, first of all, they will give you the actual cash expenses. Actual cash expenses. See, this is very important. Actual cash expenses is, let us say, 8,000. And then they will give you private use adjustment. Private use adjustment for cash basis. Private use adjustment for cash basis. Okay. Like 2,000 per occupant. 2,000 per occupant, and there is only one occupant in this house. So 2,000 multiplied by 1 is 2,000. So see, this out of 8,000, 2,000 is the private use adjustment. So the business use amount is 6,000. This is business use. Okay. And this will be deducted from your cash basis PNL. Your cash basis PNL. Okay. So be careful. You must come first to the actual cash expenses number. Actual cash expenses number. This is important. And then private use adjustment for cash basis will be given separately. And you have to deduct it. But on the same time, on the comparison, if you are doing accrual basis, then actual expenses, these are not necessarily actually paid, only actual expenses. Then they are saying, let us say private use is 30%. Sometimes they give you 30%. So actual expenses are 10,000 and 30% are the private use, so 3,000. So now 7,000 is allowed. Okay. So this is normal accrual basis. Okay. But in cash basis, you have to check first actual cash expenses. Actual cash expenses. Okay. Okay. So one more thing, point number 15 is marriage exemption. Hope you remember IHT. In IHT, if parents give gifts to son or daughter at the time of marriage, then that this is 5,000. 5,000 is exempt. 5,000 is totally exempt. The excess is paid. But this is 5,000 per parent, separate for husband and separate for wife. Okay. So if husband and wife is gifting like 15,000 on the marriage occasion, so out of this 15, like total 10,000 marriage exemption will be deducted. 5,000 for husband, 5,000 for wife. Now for the excess is 5,000. Now with the excess we need to deduct annual exemption. Annual exemption. And yes, for husband separate annual exemption is available, wife separate annual exemption is available, right? Okay. So be careful with this thing as well. But yes, if it is received from single parent, like sister, they are saying received from mom, okay, then only 5,000, or received from dad, only 5,000, right? Be careful. Otherwise, in reality, the limit is per parent, 5,000 per parent. Now, one more famous topic. I always encourage students to make notes for this as well. Make notes for this as well. And this area is basically differences between companies and individuals. Differences between companies and individuals, because many students just mix it up, these topics, and these are, and even the examiner intentionally gives some individuals topics in companies question and some companies topics in individuals, so that you do mistake, you mix up the rules, but you need to be careful, right? So the first difference is individual pays tax for fiscal year, you know that, but company pays tax for accounting period. Individual pays tax for fiscal year, company pays tax for accounting period, right? Second is, for individuals, new tax rules come with fiscal year. Whenever a new fiscal year comes, new tax rules comes. New tax rules comes for individuals. But for companies, new tax rules come with financial year. Yes, with financial year. Okay. And financial year starts on 1st April and ends on 31st March. But fiscal year starts on 6th April and ends on 5th April. Okay. Let me write the fiscal year is 6th April to 5th April. Okay, and this is 1st April to 31st March. This is financial year. Okay, now number 3, for individuals property income PNL. For individuals property income PNL is made for fiscal year. For individuals property for individuals property income PNL is made for fiscal year. Property and interest income is taxed on receipt basis. Yes, I have already told you this. For individuals property income PNL, all, even almost all PNLs of individuals except trading income, they are made for fiscal year. And property income and interest income is taxed on receipt basis. Yes, for individuals. But for companies, property income PNL is prepaid for accounting period. Yes, and property income and interest income is taxed on accrual basis for companies. Then, very important, very important, very important. For individuals, different incomes have different tax rate, like non-saving income 20, 40, 45. Interest income like 0, 20, 40, 45. There is a 0 to 5,000 band as well. Then for dividends, see the 8.75 and 33.75 and 39. For CGT, there are different types of CGT, RPG, QG, NG, and so on, right? Okay. But for companies, all incomes are same. They just lined up. And before 1st April 2023, there was a flat tax rate of 19%. And after 1st April 2023, now we have 19% tax rate. See the screen. We have 25% tax rate, and we have one area with marginal relief as well. We have one area with marginal relief as well. For individuals, yes, for individual, dividend income is taxable, yes, and it is taxable on receipt basis. But for companies, dividend income is not taxable at all. For companies, if a company is receiving dividend, it's not taxable at all. There are two cases. Case one, if dividend received from unconnected like non-group companies, then they will be part of AP, augmented profit, right? Remember, after TTP we add non-group dividends. But if dividends are coming from connected companies like from subsidiaries in which we have holding more than 50%, then in that case you don't need to write dividends anywhere, right? Okay. For individuals, trading income P&L is prepared for accounting period. Yes, for individuals, trading income P&L is prepared for accounting period. For companies, trading income P&L is also prepared for accounting. This is the similarity. This is the similarity. Don't forget, trading income P&L is always prepared for accounting period, whether you are a individual or you are a company. But yes, one more thing I want to clarify in new questions now. For individuals, normally the accounting period and trading sorry, for individuals nowadays in new questions, the fiscal year and accounting period are normally aligned. Fiscal year and accounting period are all normally aligned, they are same. But the rule is, the basic rule is, trading income P&L is always prepared for accounting period. Now, point number 7, for I have already covered this earlier. For individuals, interest income is taxed on, yes, it is covered. Then for individuals, in there are some incomes which are exempt. Yes, national interest income from national savings certificates. Then you have NISA, new individual saving account, premium bonds. These are exempts for individual, but for companies interest income is always taxable, and they are always gross. Okay, no such exemptions for companies. Then we have, if individual is giving charity to donation to a registered charity like gift aid charities, then we have three steps: crossing up, ANI reduction, and band extension. Band extension we have. But for companies, QCD, qualifying charitable donations are always gross. And one more thing I would like to say, in many questions you also have seen in the kit as well, that national, one is local charity and the other one is national charity. Yes, national charity donations are normally QCDs. National charity donations are normally QCDs. Okay. Yes, very important. For individuals, personal allowances are available. For individuals, non-saving interest person, no personal allowances are given. For companies, be careful, this may come in your theory as well. Then for individuals, annual exemption is available. Yes, annual exemption in individual CGT. In individual CGT, annual exemptions are available. But for companies, no annual exemptions are available. But yes, for companies they give you indexation allowance. But yes, indexation allowance are always given till 31st December 2017. After 31st December 2017, there are no indexation allowances are available. Okay. Next is for individuals. Yes, if you are an individual and you are selling shares, so in order to calculate the gain of those shares, you need to match the cost. And yes, for cost you need to always follow these matching order rules. For individuals, the matching order rules are same day purchase, number one, then following 30 days purchase, and then shares from pool. But for companies, if you are a company and you are selling shares, so these are the matching order rules for companies. These are the matching order rules for companies. It's like same day, it's same day purchase, then last 9 days purchase, and then shares from pool. Okay. Then as far as CGT is concerned, these all our topics are included in individual CGT. Principal, private residence relief, yes, this is only for individuals, not for companies. Rollover relief are there in both. Holdover relief means frozen gains. There was a topic of frozen gains. Frozen gains are available for both, but gift relief only available in individuals. There is no gift relief in companies, because for gift relief there should be family members, human beings. Then entrepreneur relief, the new name of entrepreneur relief is BADR. BADR and investor relief. BADR and investor relief. The old name was entrepreneur relief. Okay. So BADR and investor relief is only available for individuals. It's not available for companies. But yes, part disposal, damage and destruction, chattels, wasting, these all areas are available for both. These all areas are available for both. Then capital losses for individuals, capital losses for individuals current year. If you have a current year capital loss and the same current year capital gain, so they will never ask your permission and they will set off each other. They will, current year capital loss will set off current year capital gains without your permission. And even sometime you have to sacrifice your annual exemption. But yes, if you have any brought forward capital losses coming in individuals, then you can do planning. You can plan in such a way that you do not waste the annual exemption, that you do not waste the annual exemption. Okay. But for companies capital loss, same capital loss set off capital gains, capital loss set off capital gains in the current year first, and then remaining capital loss to be carried forward in future, and it will set off future capital gains. There is nothing like annual exemption in companies. Very simple. Now, goodwill is a chargeable asset for individual. Goodwill is a chargeable asset for individual, but goodwill is not a chargeable asset for companies. Hope you remember the conditions of rollover relief. The conditions of rollover relief. Remember, in rollover relief, you sell an existing asset, existing business asset, and you buy a new business asset. So both assets must be business asset, and both assets must belong to one of these categories. Number one, land and building used in the business. Number two, plant and immovable plant and machinery. And number three, goodwill. So for individuals, goodwill is a chargeable asset, but for companies, goodwill is not a chargeable asset, right? So you need to skip goodwill from the definition of rollover relief conditions. Yes, the payment dates for individual CDT is paid like after the fiscal year. If you are paying for 23-24 fiscal year, so from the end of the fiscal year, the next 31st January. So for 23-24 fiscal year, the CDT due date for individual is 31st of January 2025. But for companies, tax payment dates are very simple. If you are a small company, then after the end of the accounting period, 9 months plus 1 day, 9 months plus 1 day, 9 months plus 1 day. And if you are a big company, large company, then you have to pay in installments. Hope you remember the CGT of, sorry, self-assessment companies. So the next one is, so the next one is individual's property in loss is carried forward and set off against future property income. And even in this, there are few classes. There is one special individual property income which is called FHL, furnished holiday letting. Listen very carefully. Only talking about individuals. If individual is earning FHL property income, then that FHL property loss will carry it forward and set off future FHL property income. Very clear. And if individual is earning normal property income, and there is a loss in normal property income, so it will carry it forward and it will cancel future normal property income. Okay, now come to companies. If you get a loss in company's property income PNL, now that loss, be very careful, that loss will set off current year total profit and then future total profit. So here you have total profit, this is the difference. Then if an individual has taken loan to buy property for letting, that interest on loan is allowed from individual property income. Yes, it is allowed expense, but there was an exception. If that is a residential property, if that is a residential property, then from individuals it's not directly allowed from individual property income PNL, but in the end you get tax relief of basic rate. In the end you get tax relief of basic rate 20%. I hope you remember I taught you in the start of the topic, in when I start F6 course. In early days I teach property income, so in the last 20 or 15 minutes of property income I covered this area. Okay, now come to companies. Listen, if company has taken loan to buy property for letting, so that loan interest is not an allowed expense from company's property income PNL. It is allowed from loan relationship box. Remember that loan relationship interest income box, for companies it's allowed from there. So this is the major difference. There is a topic of rent a room relief. There is a topic for rent a room relief from individual. Yes, for individual there was a special rent a room relief in property income, but for companies there is no such relief. Employment income topic only for individuals. Yes, we all know. Yes, individual can do job, company cannot do job. In individuals trading income, we need to do adjustment for private use by owners. Yes, if owner the trader is doing private use of any asset, then you have to, that private use not allowed. Owner's private use is not allowed at all. But in case of company is not a human being, company is not a natural person, so company cannot do private use, company cannot do private use. So no such private use adjustment, no such private use adjustment in companies. Be careful, sometimes they give you dodge, as covered in my normal class. Sometimes they give you dodge that the director of company is doing using car privately. So yes, director is an employee, so if employee is doing private use, no need to do any adjustment, you know that. Then you have, if an individual is employee, he needs to pay class 1 employee NIC and class 1A NIC as an employee. Yes, if an individual is doing job, he has to pay class 1 employee NIC and class 1A NIC. Class, wait, he needs to pay class 1 employee NIC. No, this is a, if an individual is employer, this C. Yes, if an individual is employer, yes, so each and every employer pays class 1 employer NIC, class 1 employer NIC and class 1A NIC for his employee. Yes, if an individual is employer, if in UK you are an employer, so you need to pay class 1 employer NIC and class 1A NIC for your employee. Yes, but be careful, class 1A NIC is only paid by employer when you are providing non-cash taxable benefits. Very easy. But if a company is employer, yes, so company will also pay NICs for employees. Yes, both NICs. Company, if company is employer, company will also pay. But now the next question is very interesting. I have covered, if an individual is self-employed, he needs to pay class 2 and class 4 NIC for himself, but company never pays class 2 and class 4, because company is not a human being. As in, company is not a human being, company will never get old or company will never get sick, so company will never claim benefits from government. So class 2 and class 4 NICs are always only paid by individuals, owners, individual self-employed owners, not for companies. Individual saves for his future old age. That's why a topic of, yes, the pension topic is only for individuals, it's not for companies. It's not for companies. Individuals trading loss can be covered. Yes, if there is a trading loss incurred by individual, the trading if and you carried forward the trading loss. So for individuals, trading loss carried forward will only set off future trading profits. Future trading profits, future trading profits. Okay. But for companies, trading loss are carried forward against future total profits, future total profits, future total profits. You know that. Then for individuals, for individuals, trading loss can set off against total profit of current fiscal year and last fiscal year. Yes, 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 yes. First current year, then back, or first back. Yes, both ways possible. In individuals, the trading loss can directly kill your current year total income and then carry it back, or first carry it back and then current, right? And yes, there is in individuals there is a restriction for individual trading loss. There is a restriction. Remember, of higher of 50,000 and 25% of total income, right? I used to say this in Urdu Hindi language. In my Urdu Hindi classes मैं यूं बोलता था, अपने सारे लड़के मारेंगे और दूसरों के 50,000. Remember? Just to recall you, only for Urdu Hindi guys. Now, same relief is available for trading loss of companies, but very important, if you are a company, so first and you have a trading loss, so first of all, you can, yes, you can go 12 months back, but first of all, you need to kill current year total income first, and then you can go 12 months back. You cannot go, you cannot go directly 12 months back in companies, okay? And there is no such limits of 50,000 in companies. It's only for individuals. Then, in individuals, early years of losses relief is available. For companies, this relief is not available. We know that. In individuals, yes, terminal loss can be set off against trading profits of last 3 fiscal years in LIFO. Yes, only trading profit. But in companies, terminal loss may be set off against total profits of last 36 months. So see the two difference: trading profits, total profits. In individuals, last 3 fiscal year, but for companies, last 36 months. Both are in LIFO. Yes, loss relief claim date is different for individuals and it's different for companies. I have recommended many times in the class, again telling you that in your Kaplan exam kit, there are in the starting of the Kaplan exam kit, there are 3 to 4 pages. You must read it 10 times. 10 times. They are cash pages. They will give you cash marks. In CDT, shares pool contain normally 2 columns, number of shares and cost. But in companies, you have option. Wait, you have option. You can make 3 columns, number of shares, cost, and index cost. But nowadays, in latest past paper, they only make 2 columns in companies as well: number of shares and index cost. Number of shares and index cost. This and this. Number of shares and index cost. Okay. Then you have, for individuals, there are 3 tax payments. Hope you remember self-assessment individuals. For individuals, there are 3 payment dates: first POA, second POA, and then balancing payment. First POA, second POA, and then balancing payment. How to remember the dates? First POA is paid within fiscal year 31st January, within fiscal year 31st January, then 6 months and 6 months. Very simple. For companies, payment dates are different for small and large companies. Already discussed. For small companies, 9 months plus 1 day after the end of the accounting period. For large companies, definitely installments. Now, next. For individuals, tax return date for paper-based return is 31st October and it's 31st January. Yes. For if an individual is filing a paper-based hard copy tax return For 23-24 fiscal year, the due date is 31st October 2024, but if that individual is filing tax return, electronic tax return, electronic tax return, then the date is 31st of January 2025. But for companies, if you are a small company or large company or a baby company or medium size, any company you are, tax return filing date is constant. That is just 12 months, 12 months, 12 months, 12 months from the end of the accounting period. 12 months from the end of the accounting period. Penalties for late filing of tax return is different. Yes, for individuals it's different, for companies it is different. Covered in the class, be careful. Maintaining tax record for individuals is, it's 31st January 2030, and this is for companies 6 years from the end of the accounting period. 6 years from the end of the accounting period, so this date is also different. Now, for late submission of POA, there is a late payment of interest 6.5% per annum. I have already covered this earlier in my first handout today. But for late payment of balancing payment, you have to pay interest and penalties both. This is for individuals. In companies, on late submission of tax, you have to pay 6.5% late payment of interest. Okay, nowadays it's 6.5%, but every fiscal year it changes. So maybe if somebody watches this lectures later on, so there is a possibility with the fiscal year that it may change. So telling you now. There is a topic of cash basis. Yes, cash basis in individual trading income, but that topic is not available for companies. Now here is some mistake. In trading loss planning. Whenever you need to plan the loss in individuals, there are 3 steps. The first is go for the maximum tax rate saving. Number 2, earliest possible relief, because if you do carried forward you have to wait. If you do loss carried forward you have to wait, but if you do current year and carried back, you get the relief immediately. So it's better to claim current year and carried back, okay, because you don't need to wait. And the third thing for individual is saving of personal allowance and annual exemptions, right? So these are the 3 points. Now after 1st April 23, after 1st April 23, companies also have these same 3 points. This handout is little old. Okay, company also has 3 points, because previously, before 1st April 23, companies were paying flat tax rate of 19%. Flat tax rate of 19%. So there was no planning of tax rate. But now after 1st April 23, you have 19%, you have 25%, and you have a special rate of 26.5%. Remember the marginal rate. So now in companies, you still have 3 points. In companies, you still have 3 points. Number 1, go for the maximum tax saving, tax rate planning. Number 2, earliest possible relief. And number 3, saving of QCD. Here you have QCD. Here you have QCD, no personal allowance. There is a topic of qualifying interest in individuals. Yes. Qualifying interest is an allowed expense from total income, non-saving. You remember 3 column non-saving interest dividend. From total income, you deduct qualifying interest paid if it is given. But in companies, there is no such topic of qualifying interest. Okay. So, my dear student, I have written these points. I know there are more things, there are more mistakes. Even for this, some of my students gave me input, helped me, right? So if you find more points, do send me. I'll record more videos for you. But I know this video is helpful. These are very famous mistakes. You need to be very careful with the memory thing in this F6 paper. There are good students as well. They are working hard. They give me proper up to date about they tell me their progress. So there are many students, they have completed their exam kits by now. Study hub practice they have done. Please solve the mock. Don't take mock non seriously, take it seriously, right? It's an important thing, because in exam you have to perform the paper on time. So try to solve 2-3 mocks so that you will be able to hold the time pressure, right? These all are risk management techniques. Mocks available on ACCA website as well, pre-mock. That is also very good. So wish you best of luck. Thank you and take care. Bye bye.